Hi everyone, happy May, happy spring, happy everything. I hope you were all able to catch the IG live that I did with Doug Smaldino last week from Hillhurst Mortgage. If not, I shared the link below, so give it a watch. But to summarize, Doug gave some really insightful information and context to the current housing market. I mean, you heard from me 2 weeks ago that we are not experiencing the recipe for disaster for a bubble burst of 2008. Whew. Like when people were equity farming their homes, like pulling cash out to go buy boats and cars and other things, or just basically overextending themselves, or getting loans that they were never qualified to pay for to begin with. And banks are not doing the ninja loans. No income, no job, no assets. No, most people are sitting on a minimum of 40 to 50% of equity in their homes right now. So that's good. But what we are all feeling right now is inflation, right? You know, at the gas pump, at the grocery store, and certainly in housing prices. Now here's the good news about interest rates. Typically, when the feds raise interest rates, they're doing it to slow down the market. It is a method of curtailing inflation, ultimately, which I like to call stop the bleeding. So if interest rates go up, eventually the market will cool. Here's something really interesting. Inflation is the enemy of long-term interest rates. Okay, so Wednesday this week, the Fed funds rate went up in an effort to curtail inflation. They want to get it under control. Everyone does, okay? So there's really nothing to fear with interest rates going up a little bit, and it's still a lot lower than 8% interest rates that we saw back 15 years ago, or 18% interest rates, which was back in 1981. Of course, I was just a wee little lass back then, so I don't remember that. But just keep in mind that analysts are predicting that in 2024, rates will go back down again. Okay, so sellers, my question to you is, are you in your forever home? Think about it. If you're just in your first home and it's not quite working for you, or you've outgrown it, or your needs have changed in this post-COVID world, you're probably sitting on a minimum of 30% more equity in your home. Minimum. Okay, so your house is probably worth, I mean, if you bought it for $1 million, probably worth 1.3 now, if not more. So if you're not taking all that cash now to use that towards your level up home or your forever home, what are you doing? I am here to help you, and that is a dose from Emily, Reality Girl. Bye.